These days, it seems to me that many traders feel the need to be overconfident with their trading, as if it's a necessary part of becoming a good trader that you have to act like you're invincible, especially on social media or in the comments here on our channel. But let me tell you from experience that this is often the thing that leads to a lot of traders failing. We might feel that we're confident in our analysis and confident in our trades, but we can never come anywhere near to knowing with 100% certainty what's going to happen next. No matter if we think we do have that amount of certainty, we don't. Now, I already know that if you mention George Soros online, it's like asking for trouble in the comment section. I've made that mistake before. But look, whatever you think about his political views and whatever he does with his money, whether you love it or hate it, he's still one of the greatest traders of all time, and we can still learn a lot from what he does and what he did in the markets. So in one of his books, he's asked about his analytical ability, and he says, "I am not a professional security analyst. I would rather call myself an insecurity analyst." And when he's then asked to elaborate on that comment, he goes on to explain how he knows that he may be wrong, and that gives him a sense of insecurity. Because of that, it keeps him alert and he's very critical of himself. He's constantly looking for the flaws in his position because he feels insecure about it. He knows the flaws must exist. And then once he does find a flaw in the trade, it doesn't mean that he just closes his position. In fact, now he ends up feeling more confident. The insecurity is gone because now he knows how he could be wrong and he can be prepared for that. He also mentions how he now knows how he could be wrong, but the market doesn't. So this means that he's actually ahead of the curve. So what he'll do is then look for signs that things are going wrong. And as soon as it seems that things are, he'll close the position based on actual evidence that he's wrong in his position, rather than just having blind confidence that he's right. Now, this actually goes against what most traders do. Most traders will do their analysis, open their positions, and be convinced that they're right. It literally can't go tits up. Now, of course, some traders doubt themselves endlessly, and they usually don't make it to the point where they start profiting from their trading when they feel so insecure constantly, like, oh my God, what am I doing? Open a trade and close it immediately. I'm not talking about that. I'm talking about the traders that you see arguing online, not accepting opposing views. They're right, and everything that suggests otherwise is wrong. You'll see it all the time in the YouTube comments. But although not everyone will give it the big I am like that and make it obvious that they think they're right, the majority of traders still do something very similar, but much more subtle and insidious. They'll experience confirmation bias, and they'll do this thing where they'll scour the news or data, the charts, with very selective attention that causes them to only see the things that confirms their viewpoint and ignore all the things that don't confirm it. And guess what? This is obviously a recipe for disaster, right? You see, it's important to have conviction in your trades. Otherwise, you're just going to be shaken out of your position at every fluctuation the market makes, right? You have to have a certain element of diamond hands. But let's not confuse conviction with overconfidence. There's a saying that I really believe in, and I quote it all the time, so you've probably heard it from me before. It's from a chap called Paul Sappho, who's a famous forecaster, and the saying is, strong opinions, weakly held. So you can have enough conviction to open a trade, but be willing and ready to change your opinion when you're proven wrong. Because here's the thing, as traders, once we recognize that we do have flaws in the way that we think, and we have these biases, we're subject to things like confirmation bias that can work against us, and cognitive dissonance that doesn't allow us to face the facts once we're too firmly into our position. Once we recognize that we do have those flaws, we can come up with approaches that counter those and stop us causing huge disasters for ourselves. So once we're aware of them, we have to figure out how do we counter that. So just like George Soros, you should start to become more of an insecurity analyst. Rather than having confirmation bias and looking for things that confirm your point of view, take an approach that's more similar to the scientific method and look for disconfirming evidence. This means you're looking for information that can show you that your viewpoint, your position, your opinion is wrong or not true, or the opposite is the case, or whatever it might be. And once you find those things, just like George Soros, it doesn't necessarily mean that you have to exit your positions, but you will be better equipped to make the right decisions. Now, a response I often get, particularly from new traders when I discuss this sort of thing, is that, yeah, these kind of things work for fundamental analysis or long-term investors, but technical traders, we don't need to worry about this sort of thing. And that's simply not true. In fact, this is not just a trading or investing thing. It's something that applies to every aspect in life. It's just a good way to be. But if you are using technical analysis for your trading, let me give you a simple, practical thing that you can start doing to make use of this sort of approach. Now, I talked about this in my video on context-based trading, which is how I trade. I went into a lot more detail there, and you can find it linked up there if you want to watch that as well. Recommend doing so if you haven't already. But basically, a lot of traders, when they do their analysis, you may have seen on things like TradingView or on Instagram, wherever, they'll come up with one outcome. They'll often draw an arrow on the chart to show what outcome they think is going to happen next. And so this is what they think is the next likely outcome, and that's what they're going to trade based on. But when I do my analysis, I don't want to have that sort of tunnel vision and only see one potential outcome, because then I'm just going to have selective attention, or I'm not going to see all the ways that I could be wrong. So instead, I'm looking at what all of the potential outcomes could be, all the alternative outcomes. That way, I now know what may happen next, not just the one that I'm going to be trading, but every other potential outcome. And now I can think about what sort of activity in the market or what sort of information might come out that would confirm or disconfirm any one of these outcomes. So what might happen if I'm wrong with my trade? What signs would there be that that's what's playing out? I can spot those because I'm not so firmly in my viewpoint thinking that I'm 100% right. I'm not only seeing one outcome the market's going to make. So all of these bits and pieces that I can keep an eye on to see which outcome is playing out, or signs that the outcome I want to be playing out isn't going to be playing out, those become the focus. These are what I'm looking for during my trade to help me with my trade management. I've learned the hard way, unfortunately, that no matter how convinced I am of something, the market doesn't always necessarily have to agree with me. And I'm sure it's going to happen the same for you too. If it hasn't happened already, you can almost guarantee it will happen in the future. Because many intelligent people like you have gone broke because they think the market's wrong and their analysis is showing that they're right. But you can't fight the market. As the saying goes, the market can stay irrational longer than you can stay solvent. So we have to stop allowing overconfidence, stubbornness, ignorance, and all these other deceptive little issues. We have to stop them coming into our trading. Instead, actively go against it. Become an insecurity analyst and actively look for the flaws in your position, and that's what will save you from disaster. So if you found this one useful, please do hit the thumbs up button and let me know your thoughts in the comment section down below. I am expecting that there'll be some George Soros hate down there, so perhaps we can offset that with some on-topic discussions instead. Please do subscribe if you want more trading lessons, and we also have a second channel, Market Movers, where I go through the financial news and the charts during the week to see how things are moving the price, and it's a bit more practical. And if you want to know more about how I trade, check out the free training that's linked below in the description box or at the end of this video. Thanks so much for sharing your time with me. I appreciate it, and I'll see you soon. Take care, guys.